Merry Christmas, everybody, and happy holidays. What is going on? It's 1:30. I'm not late. I don't understand all this late stuff. Do it to Tanner, not to me. Hopefully, everybody had a great holiday season. And this is the first time in a long time where I'm not doing anything on Christmas Day. So I figured we do a Christmas stream for everybody who is not traveling and not doing anything today. I'll be doing stuff later, not during the day. So, thank you everybody for being here. Hopefully, it's been a great year for everybody. The markets are at highs. I think we may hit 7,000. It's looking like it. We'll see what happens. We got a couple of trading days left. Before we go into what I am buying myself for the holidays, please take a moment and read this disclaimer. I am not your financial advisor. I am not a financial advisor. I'm just a guy who does a lot of research. Please take everything I say with a grain of salt, and please do your own due diligence. Thank you very much. Wow, I'm actually shocked how many people are here. Thank you so much. Really appreciate it. All right. The first thing I'm going to talk about is my outlook. I believe we're going to do a full New Year's Eve stream, but the way that I am looking at it right now, I do believe we're going to 8,000 on the S&P in 2026. The reality of the situation is we've gotten every economic indicator that we want at the places we want. The Fed economic projections came out. They are expecting GDP growth over the next 3 years. We have inflation declining. We have rates declining. And the Fed is projecting that unemployment will start to taper off. Now, unemployment is the one metric that I'm a little worried about. But if it can top out around 4.6 and start retracing, that'll be super bullish in my opinion. We're about to enter a period where the economic landscape is super bullish for a full market rally. And I do not want to become an uber bull, but I do believe in the American economy long term. I do believe we will have retracements. Seeing a 5 or 10% retracement is probably going to happen in 2026. Happens all the time. Is anything to get scared about? No. The one thing I do not want to see is the market go straight up. A healthy market has retracements. A healthy market has rotations. There's just nothing on the landscape where I'm seeing a reason to go down by 20, 30%. When I look at how everything is structured, rates are coming down and it is becoming easier and less restrictive for smaller or middle market companies to borrow. From a profitability metric, lower rates is very bullish. Companies have rolling debt. They can refinance at a better rate. They can also tap the debt markets to expand. I believe that we're going to have a lot of productivity growth in 2026, mainly from the bottom 450. And when I say that because we have a lot of visibility into spend on RPO from the hyperscalers. And the largest companies in the world that are in the S&P have the means on the balance sheet and the cash flow to hire consulting companies and to implement all these changes on an AI perspective. 2026 could be the year where we do get an everything rally on a long-term basis. The way that I'm looking at the projections from the main companies, Microsoft, NVIDIA, Meta, Amazon, they're all projecting larger revenue and larger EPS. And if we have productivity gains in companies like Coca-Cola, Pepsi, Johnson & Johnson, et cetera, et cetera. You could get earnings expansion off the board. So where do we put capital? I think the greatest place to put capital is S&P 500, because why would we want to bet against the American economy? And that's something that I've never understood the bears trying to time the market. Rather than timing the market, I look at it as time in the market. So we'll see who's right. Over the long term, the bulls have been right. And it almost feels like the bears are just pulling at straws for their time to be right. But their time to be right is very limited. And they will be right eventually, but it's very limited. There's a lot of companies that I think are going to blow up next year, and they do not matter for the market. I think quantum is going to blow up. I think companies like Oklo will continue to blow up. They're not going to matter for the market. It does not matter. They're not part of the S&P. You look at Oklo, it is quintessential to my argument. I'm going to share this chart. Look at where Oklo is. It's gone from 193 to 81. And the market's at all-time highs. Anybody who thinks that these companies matter to the market or venture capital going in, this is not the same thing as a dot-com bubble. It's a stupid argument, and these companies don't matter. Will these companies be good in the future? Maybe. I don't have a crystal ball. But pre-revenue companies and pre-earnings companies are not companies I'm interested in. And once again, this has been cut by more than 50% from the top, and the market's at an all-time high. Quantum companies retraced hard, markets at all-time highs. These companies don't matter to me. I don't cover them, and I don't care about them. What I care about is big companies. Now, first one on my list that I am buying for myself is Energy Transfer. I want the 8% distribution. I think we need more pipelines. I think we need more energy. And when I look at Energy Transfer, this is a company that is doing over $10 billion in cash from operations, and it is trading at a very low multiple. Let me bring these up for you. So I track Energy Transfer across Plains All American, Enterprise Pride Partners, and MPLX. The reason I track it against them is because of their corporation status. It is a MLP. For anybody who is not familiar with that, as a master limited partnership, it does issue a K1 at the end of the year. So if you get interested in Energy Transfer, please talk to your accountants. At a K1, you have to file. Companies like Energy Transfer, you have to pay taxes in multiple states. Please look into the implications. Now, I'm not a tax attorney. I'm not a tax accountant. I'm not getting into the ramifications of it. Please seek a professional who can explain it to you. Because God forbid I mince words. I don't want to hear it. So, Energy Transfer's enterprise value to adjusted EBITDA is the lowest in the peer group at 8.5 times. This chart right here. Maybe expand it a little. You got market cap to adjusted EBITDA. Energy Transfer, 3.5 times. Distributable cash flow. Market cap to distributable cash flow. This is the most important metric, in my opinion, more than adjusted EBITDA, because this is what funds the distribution and what is retained for CapEx projects. Energy Transfer is the lowest in the group. And you're getting an 8.11% distribution yield. The reality is we need more energy infrastructure. We need more pipelines. And with all of the data centers going up, we just need more energy. I think Energy Transfer is undervalued. My fair value is around $19.50 for it. I'm not expecting this. This is not a capital appreciation play. I am not expecting this to go to 30 or 40, okay? I think if this gets back to 20, it'll be a win. I don't even know if it will do that. It's a hated sector. But the cash flow is real. The distributions are real. And I really like this for the reoccurring income. Now, you can do an AMLP, which is the MLP ETF, and not deal with the K1 and get all the good MLPs in the basket. But from an individual perspective, Energy Transfer is the first one on my list that I'm buying for myself for the holidays. Now, the next one that I am buying for myself for the holidays is Verizon. Verizon is something people hate. It's under 40. The dividend yield is almost 7%. Is Verizon's debt a lot? Yes, it exceeds $100 billion, but their EBITDA exceeds $50 billion. They have more than enough earnings power to cover the interest. I am not in the camp of Verizon being dead money. I don't care where Verizon was 5 or 10 years ago. I care where it is today and the company it is today. And the company it is today, from a valuation standpoint, looks undervalued to me. I'm getting paid 7%. And their new CEO, people dislike him from PayPal. The reality is PayPal's revenue grew roughly 4x under him. He's got a very incentivized pay package to get Verizon between 55 and 75 a share. They are going to look to do several things. They have the Frontier acquisition. There is a tremendous amount of cash flow in Verizon. I think they're in a position where they're going to be able to issue new debt, repay higher yielding debt, pay down some of the debt with the free cash flow, and really expand the margins. In addition to utilizing AI, they just started layoffs. There's a lot of things that make this interesting from a margin perspective. And the reality is nobody is getting rid of their cell phones. That's the reality. Nobody's getting rid of their cell phones. And this is just a pure play income play that I think can go to 50. Is it going to? I have no idea. Once again, this is not a double. This is not a double in my opinion, but this does have value that can be unlocked. It's trading in the single digit PEs, and I'm getting paid 7% on it. Verizon and Energy Transfer are the two horses for individualized income that I really like at these levels. Now, we do have some growth that I'm going to talk about. One of them is a hated name and one of them is a loved name. We'll start with the loved name first from the community. I recently became a shareholder in Nebius Group. And this is something I've been talking about, something I've been doing more due diligence on over the past couple of months. And it came down to Nebius and CoreWeave. If you believe in the AI revolution and you believe demand is going to outstrip what the hyperscalers are able to build, they're going to need the neo clouds to offload some of this to. Nebius has been doing huge deals with Microsoft and Meta, multi-billion-dollar agreement with Microsoft, roughly $17 billion, $3 billion with Meta. This is something that is extremely interesting to me. It's positioned as a huge infrastructure provider in GPU and AI cloud, plus the data center capacity. And I think it's going to continue to capture a lot of the market in this segment. I don't think that we have seen the last of these deals. We have earnings season coming around the corner. End of January, I think that we're going to get some more announcements. When I look at the RPO books for Microsoft and for Oracle specifically, just between the two of them is over $800 billion in RPO. If all this actually gets fulfilled, which this is not, these are real numbers and this is real contracted revenue, I think Nebius and CoreWeave are going to do well. The difference is the balance sheets. Nebius has triple-digit growth this year, triple-digit growth next year. Whoa, 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 whoa. Future investing is in the chat. And Tanner, I did say 3 billion with Meta. It is 17 billion with Microsoft, 3 billion with Meta. And if you want to come on and hang out for a little bit, I didn't think anybody was around, so I did not send the bat signal out to anyone. But I'm opening WhatsApp now. You will be getting a link. So if Tanner wants to come on and spend some of the holiday with the community and myself, he is more than welcome to. He now has a link. I wasn't looking at the chat. I apologize. I am sorry. Anyway, Nebius is really interesting to me. I think that we're going to see some more deals booked. The growth across the hyperscalers is incredible. And the big thing with Nebius, in my opinion, is looking at where the analysts have everything going, because they tend to be very conservative. They're expecting 520% of revenue growth in 2026. That's incredible. And then another 125% in 2027. So when I look at them coming in at under $1 billion this year and then getting 500+% in next year and 100+% 2027 of revenue growth, that's huge. This is a company that is supposed to lose money next year, but in 2027, there's a very good chance that they will be significantly profitable. So this is something I'm taking a flyer on only because I understand the industry, and I do think we need way more compute power. Nebius has ran a lot this year. It's also well off its highs. Hit 141 recently. It dropped down to 75, and it's bounced off of it. I think the bounce was good. I started the position right after the bounce. I wanted to wait to see when it would sell off, when the sell-off would stop, and I wanted to see an upward swing. I'm just going to keep buying. This is nowhere near a full position. I have no idea what it's going to do in the future, but over the next 2 or 3 years, Nebius has a lot of firepower behind it, and this is the first NeoCloud that I've invested in after doing the research, and this is the one that I'm going to be putting capital toward. So I know a lot of people wanted me to get into the NeoClouds. For a while, I couldn't do it. Now I did. I believe in this one. We'll see what happens. But at a 23 billion market cap, this is incredibly interesting to me. They have 4.8 billion in total cash on hand. They have 4 billion in long-term debt, so they have more cash than debt, which I like. This is going to be really interesting to see how all this shakes out. The most important thing to me is the next several earnings calls from the hyperscalers, and I think that this is going to do well. So this is the one on the growth side. That is my flyer. I think it's early. I think it's going to take a couple of years to play out, but I do think that these are going to become names that become more. I think that they're going to have a lot more enthusiasm around them from Wall Street rather than Main Street. I do like the numbers around CoreWeave, except for the balance sheet. And that was the big determining factor for me. And Nebius's holdings are also interesting. So that's why I picked Nebius over CoreWeave. I may get into CoreWeave in the future. Nebius is the one, though, for now. So that's the flyer. The next one on my Christmas list for myself, good old Salesforce. Nobody likes it. That's why I like it. Just kidding. The fact that nobody likes it is great to me because sentiment is horrible, and that's when I like picking up these types of companies, when sentiment is horrible. And the reality is, I'm sure we're going to get it in the chat. Everybody's going to start saying Salesforce sucks, Salesforce sucks. Guess what? Are you the decision maker at the company where you're using it? The reality is that everybody can say the platform sucks, and everybody can say that Salesforce is dead. I'm going to let you in on a little secret, though. That's not what the CIOs and CIOs are saying, because when you look at Salesforce's revenue, up and to the right, it has never had a year. Okay? I'm going to repeat this and keep this in mind. Salesforce has never had a year where revenue has declined. Look at this. You go from 2018, 10.5 billion to 13.3, 13.3 to 17. This is all in billions. 17 to 21.2, 21.2 to 26.5 at the end of their 2022 fiscal year. Now they go to 31.5, almost 35, and then from 35 to almost 38, and now in the trailing 12, they're over 40. So everybody who says Salesforce sucks is entitled to their own opinion. The reality is their revenue grows year over year, every year. They've never had a year where the revenue has declined. That is very bullish for me. Somebody can come out and make a better product, and everybody can say that Palantir or this company or that company can make a better product. Great. Question is, are people going to leave? That's the real question. Are people going to leave? I don't think they're going to. Salesforce is becoming an AI play. Regardless if people want to agree with that or not, that is the reality. Their Agentforce and Data 360 increased their revenue 114% year over year in Q3. Management cited their RPO was $29.4 billion, up 11% on the AI side. They disclosed that commercial momentum has increased with 9,500 paid Agentforce deals and 3.2 trillion tokens processed during the quarter. So this is my AI catch-up play for 2026. I think that people are buying into a narrative that's incorrect. I'm going to go against the grain on this one. It may not work out. But at the same time, when I look at profitability, and that is what I ultimately care about, is what are we buying here? We're buying a company that generates revenue and profitability. And when I look at where this is at, and please forgive the chicken scratch on this, I'm going to put it up against Palantir. Only care about columns B and C for the moment. I'll explain what column D is in a second. We're buying a company where Palantir's market cap is roughly 200 billion more than Salesforce, yet Salesforce's revenue is more than 10x, and its EBITDA is more than 11x. Operating income is 10x. Cash from operations is around 7x. And free cash flow, roughly 6x. This is a company that's trading at 21 times EBITDA when Palantir is trading at 528 times. We're getting Salesforce here at a crazy low multiple for a cash cow with a strong balance sheet and great margins. And for everybody that's on the Palantir train, I just want you to think about this. Column D represents a fictitious number on Palantir with built-in growth. If I project out being where they are today, and we know that this is not where they're going to finish for 2025, but I'm just going off of where they are today. If they grow their revenue by 50% next year, it'll be 5.8 billion. If they grow 40% over the next 3 years, they will generate in 2029 $16 billion in revenue. So they got to grow 50%, then 40%, 40%, 40% for their revenue to get to $16 billion in 2029. And at $16 billion, at their current margins, okay? Current margins, their free cash flow would still be at $7.3 billion, significantly less than Salesforce. Their EBITDA, $3.6 billion, significantly less than Salesforce. It would still trade at 128 times EBITDA. So I know that a lot of people love Palantir. I love Palantir too. The reality is that I think Salesforce can get a multiple, and I think that where I'm paying for Salesforce here is very interesting, and it can become very lucrative. We'll see what happens. I mean, look, Salesforce over the past several years, over the past year, it's down 23%. Over the past 5 years, it's only up 17.5%. This is also a company that was at 367 and it's trading at 265. I think this is the next IBM. I think that this is the next one that we see reverse the upside. We just saw Cisco and IBM break out to the upside. They were two of the most hated ones in the market. And I do think that Salesforce is going to be the next one to do it. I could be wrong. But huge cash flow, huge buybacks, forward growth. I'm in it. It's on my Christmas list to buy more. I've been adding. I'm going to keep adding because I think paying 22.5 times this year's earnings for this company is inexpensive. So before I go on to some of my more things, I want to thank everybody for being here. June, thank you for being here. Seeing a lot of regulars here. I mean, Sergio, thank you for being here. Really appreciated everybody. Rambler, what's going on? Tanner's probably busy. Don't give him any crap. He is probably hanging out with the family. So I will be doing that in a little bit, but want to come on and stream and hang out with everybody in the community for a while. Thank you so much, Bart Austin. Truly appreciate the super chat. Thank you so much. Adam James Abroad, thank you very much for the super chat. SoFi Gang Breakout 2026 coming. So this isn't going to be a surprise anymore. SoFi is the next one. The reason why it's going on the Christmas list is because I may start a new portfolio and do it live on YouTube. And if I do, new shares of SoFi will get acquired. I gotta say, thank you, everyone. This chat is amazing. You got this. So when I'm not looking at the chat, it's because I turn the comments off on my screen because I will just get sidetracked and start cracking up. And everybody makes me lose my train of thought because of how hilarious everybody is. It is freaking great. So thank you so much. Really appreciate everybody being here and hope everybody has a great holiday season. So I think SoFi is going to break out in 2026. And we saw it break out this year. Mamba mentality. Thank you so much for the super chat. Love the AI debate with Chris and Matt. Different opinions is great. I think having constructive conversations around it is very important and for it to be done respectively. So, look, I respect both their opinions on it. My opinion's not changing, though. I truly do not think any of these companies like Oklo matter for the S&P at all. And I do think that we are in an AI revolution that's going to last for several years. And we've seen the numbers. Apple has not invested in themselves. Their CapEx has done nothing. Sorry, their cash from operations has done nothing. The other four have invested in themselves. Cash from operations has expanded tremendously. Those are the facts. You can't distort facts. I'm using raw numbers. So we'll see what happens. But I am predicting that AI, even if these companies spend over the next 2 years an ungodly amount of money, does not matter. They're going to monetize it. And I'm also, look, for a several quarter downturn, I could care less. And I think that that's where everybody misinterprets what I'm saying. I am in this for the long haul. I am not a day trader. I'm not looking for protection. I can ride any of this out. And if Microsoft, Alphabet, Meta, and Amazon start spending more in CapEx and the market punishes them for it, I'm not running for the hills. Here's why. If we get a retracement that lasts 2 or 3 quarters, that just gives me an opportunity to dollar cost average into the S&P even further and into these names even further if they get to an interesting buy level. I don't think these companies have competition other than themselves. And eventually, they're going to benefit from all the capital they're allocating toward CapEx. And if we get a 2 or 3 quarter retracement, that's fine, because I think we'll come out the other side much stronger, just like we always have. And I think that that's where a lot of people misinterpret what I'm saying, because when I talk about an AI revolution, I'm not talking about what happens in the in-between. I'm talking about where we end up in a couple of years from now. And I think that's significantly higher, with a really good chance we see 10,000 on the S&P before the decade is over. Thank you so much, Angel. Really appreciate it for the super chat. Thank you so much. Community is amazing. Thank you. So here's why SoFi is super interesting. I think we're getting a really interesting macro environment set up for them. I'm going to bring up the charts for SoFi. So give me one moment. And if we do start a portfolio on YouTube, I have no idea what I'm going to allocate to it. I'm still working through a few things in my mind. SoFi is something I would buy to run a wheel strategy on. Now, when I look at the student loans, personal loan, and home loan originations, personal loan originations is carrying the group. Okay. It has become their largest origination segment, and it's off the charts. Student loans is still not back to where it was on a pre-pandemic level. As rates continue to come down, I do think student loans can get back to where it was and higher in an environment where personal loans can keep going higher. And if the housing market gets unlocked, I think that we can see the loan book grow at a tremendous pace. Man, coffee is so freaking good. Unbelievable. Now, when I look at the lending, technology, and financial services net revenue, financial services is going gangbusters. And I love the fact that this is not a company that is being held up by lending. Lending is still going higher, but financial services is really starting to pick up a lot of slack. And I think that the technology platform next year could do well. It may not be in monetized revenue in 26, but if we get some deals on the banking front of different banks implementing their technology, I got to tell you, this could set itself up to truly get a tech multiple and be a catch-up trade. A lot of people look at Robinhood and they're thinking, I missed Robinhood. What can I get into? That could be a theme. And as stupid as that sounds, it really could be a theme. So we'll see. I mean, there's a lot of things to like about SoFi. And I do foresee crypto being big for SoFi, options being big for SoFi, business banking being big for SoFi, and I think it can go higher. I don't think we're going to hit the $45 PSU tranche that Anthony Noto needs to unlock all of his RSUs. I'm sorry, PSUs. But I do think we hit the 35 by March. We'll see what happens. SoFi could also get into the S&P 500 next year, which would be a catalyst. And then who knows what other indexes they get into. This is something that's got a lot of staying power. Premiums are okay on SoFi, but this is something that will be on my shopping list. Let's see. Yeah, I mean, I agree with a lot of people in the chat about SoFi. And I don't look at Webull at all, so I have no idea. I don't know anything about their business, so I wouldn't be the best one to discuss it. I don't follow any of those companies. So see what happens. Now, the next one on the list is one that is not going to come as a shock to anybody. And I'm not going to be buying it at this level. But if it retraces, I'm grabbing more. It's NVIDIA. It's good old NVIDIA. And I got to tell you, there's a lot of things I like about NVIDIA right here. Give me 1 sec, everybody. I'm just looking for the valuations that I made. Here we go. So this is going to be my late gift to myself if we get a retracement again. So when I look at NVIDIA on a forward basis, and the reason why I have Jan 26, June 26, August 26, blah, 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 is because I am sick of people saying when I try to make things easy and do something nice for everybody, that these aren't true metrics because they're not in the same, they don't report at the same time every year. So I broke it down, made it more complicated because too many people were complaining. The reality is NVIDIA is trading. This is this fiscal year, okay? They report in March. Their fiscal year ends in January. This is really 2025 numbers, but it's their 2026 fiscal year because their fiscal year ends in January because they don't report on a true calendar year. But over the next 2 years, they have 104.9% EPS growth from what the analysts are projecting. They're trading at less than 20 times forward earnings. This is such a cheap stock here. And we look at the deal that they just announced for $25 billion in cash, that this is going to go higher in my opinion. I really do think it's going to go higher. They made this just a little smaller. I think that this is a market that's got a lot of legs. Microsoft looks interesting. NVIDIA looks interesting. Meta, Amazon, Alphabet all look interesting. Even Broadcom at this level is starting to look interesting. This is a market that's got a lot of legs. Do we really think that the largest companies in the world are going to let us down? I don't think so. I don't think so. I don't think it's crazy to think Meta is going to be significantly higher this time next year than next year. And if Meta retraces significantly, if Zuckerberg says something on the next earnings call that makes it tank, I will buy more as long as the fundamental story is still intact. Amazon is my next company that is on the Christmas list for gifts to myself. The reason why Amazon is on the Christmas list is because they're generating an 11.2% operating margin. This is nothing that anybody hasn't heard of yet from me. I really want to put this in perspective and show everybody these numbers and let you know what my reasoning is behind Amazon. Okay. We look at 714 billion in revenue being generated for this year. 1 trillion in 2029 and 11.2% operating margin is 112 billion in operating income. Over the next 4 years, I do think that we can get that operating margin between 18 and 20%. And if they do, that'll be more operating income than any company has ever produced to date on an annualized basis. We've already seen Nvidia hit 5 trillion. Amazon's at 2.5 trillion right now. So, over the next 4 years, if they do get to 1 trillion in revenue, and if they do get to an 18% margin, 180 billion operating income, to me, this is a company that can be $6 or $7 trillion, and I don't think that's out of the question. So, Amazon's on the list. Amazon is on the list, and even from an earnings perspective, it looks really freaking interesting trading at 16 times 2029 earnings. It's a lot of earnings growth every year. So we'll see. I really like it. It's not for everybody, but I do think that they are going to be one of the biggest beneficiaries of AI and robotics, and that's my premise on why they can expand their margin. And I want to bring up the same thing for NVIDIA, so just give me one sec. So we look at NVIDIA, I mean, this is really crazy. The fact that they're expected to do 57% EPS growth in this fiscal year, and in next fiscal year, 61%. I mean, if they do accomplish that, what do we think is going to happen to the share price of NVIDIA? I think it goes way higher. And then we look at the consensus estimates. I mean, you have 62 analysts putting projections in for next year. This is a company that at over 200 billion revenue is expected to grow by 50 freaking percent. 50% next year. I don't think this is something that's expensive by any means. I have a bunch of it. So from an individual position, NVIDIA it's a top 5 holding now. It is a top 5 holding of mine from an individual position. And I think it's going higher. Now, this is where I agree with Chris. At some point, these numbers are going to run out. I mean, look, nobody knows what the future holds, okay? But we are seeing revenue growth of 50% and then 27%. And then the number of analysts drops from 47 to 6 to 3. Going out more than the next 2 years this is over. This year is over in a month. So going out past the next 2 years, it's so hard. I may get out of NVIDIA sometime next year or the year after, unless the forward story changes. And I know that I'm going to not catch all the upside on NVIDIA, and I'm okay with that. Because at some point, I do believe NVIDIA gets into a boom-bust cycle unless they really augment the revenue that they generate from hardware with their software stack. So this may only be a 1 or 2 year play for me from here. And it may be longer. It depends how the story changes and unfolds. But I do think we got another year or two of NVIDIA doing well, and then I'm going to start taking money off the table. And this could be one of those companies I just take my initial investment out and then let everything else ride. So we'll see. But NVIDIA and Amazon, to me, are the 2 horses in the Mag 7 that I really like. I mean, I like all of them, ex-Tesla, but these are the 2 that I really want to keep my eyes on. I want to add to Amazon here. And if we get a retracement, NVIDIA is on that list. So I've had dreamed that at Steve, it's ran by AI, and I love it. Love it. So look, here's the next one. And a lot of people in the community got in on this, and a lot of people are doing well on it. I have no idea what it's going to do. Okay. I have no idea what it is going to do. QXO. I will repeat QXO. I've been talking about QXO publicly since October. Put an article out on Seeking Alpha titled Deconstructing the Playbook to Consolidate Building Products Distribution Market. It is up 20% since then. It retraced. Oh, I'm sorry. It's up 19% since then. It retraced in the beginning, and it fell from $18.10 when I wrote the article to roughly $16.50 or so, and then it jumped. Look, this could be a 15 or 10. I have no idea in the short term. But QXO is a Brad Jacobs special. This is the guy who built United Rentals, United Waste, XPO Logistics. He has more than 500 M&A deals under his belt. I think that we got a super cycle for QXO happening as rates decline, because what they did was they purchased Beacon Roofing, which is a $12 billion revenue company, as their bedrock platform for distributed building products. They are revolutionizing the platform. They're looking to create a better mousetrap to get supplies to builders. I think that they're going to move into plumbing. They're going to move into other areas, electrical. I think they're going to become the de facto for contractors. And in an environment where rates continue to come down and the housing market has been locked up for a while, when the housing market, when the golden handcuffs come off and we have more construction going on, we have more people moving, more people doing renovations, a company like QXO can do really well. I do not think it's crazy that he's going to continue to acquire smaller companies, and he's going to do a private equity methodology where he just acquires, grows the revenue, grows the EBITDA, and then gets a multiple based on the consolidated company. So QXO to me is very, very interesting. Started position, a dollar cost average down. I am still looking to add more shares. I do not have a full position. The reason I don't have a full position is I never go. AK Electrical, that's right. Listen, I don't know if that's actually the guys from AK. If it is, happy holidays. If you need any electrical products / whatever for electrical needs, contact AK Electrical in Long Island. They're freaking amazing. Personal friends of mine. This is not a paid sponsorship. I've known those guys since high school, and they have done a lot of work for me personally and business-wise. They are freaking amazing. They are amazing. So please, if you need any electrical work done, you're in the New York area, reach out to AK Electrical. So they're top-notch. Anyway, QXO, I do think we'll move into adjacent markets. And as rates come down, there's probably a lot. Remember, the average roof lasts 20, 25 years. The median home age in the US is 44 years. And we're in an environment where people probably weren't tapping home equity lines of credits, taking a second mortgage out to do renovations because it was too expensive. In a lower rate environment, I got to think that that's going to increase. And if that increases, I really think QXO is going to do really well. I really do. So that's the other one that's a growth seeker for me. So the two growth ones are QXO and Nebius that are on my Christmas list I am buying. My underappreciated one is Salesforce. NVIDIA. NVIDIA is not underappreciated, but I think just from a normal growth perspective, NVIDIA and Amazon. And then the two income plays that I really like here, Energy Transfer, Verizon. So that's my Christmas list right now. Dare I say the crypto one? Dare I say it? Should I? I guess I'm going to. In fact, I'm going to put my money where my mouth is. I'm going to buy more Ethereum right now. Get my phone out. I'm going to buy more Ethereum. I don't even know where Ethereum's at. It doesn't matter where it's at. We're just going to buy it. So give me a moment. Let's transfer some money in. Deposits. I will say that I know that Tanner was saying he really likes Coinbase. I don't see it. I am the spread was so ridiculous when I went to go buy this on Coinbase. No. All right, here we go. I mean, that's so cheap to buy Ethereum. I just bought more Ethereum officially. So Ethereum's on the Christmas list. Christmas Day, buying Ethereum. Crypto markets are open, but stock market isn't. No, AK Electrical is no relation to AK Media. None. None. Anyway, Ethereum, I think, is going to do well. And I had said in the beginning, I do not know what the hell Ethereum is going to do. You look at the chart, and I'm going to be a little vulgar right here, okay, everybody? We're going to get Webull up, and I'm going to be a little vulgar because I guess it's going to be easier for everybody to say. So please excuse my language, even though I really don't care. Because I put on the videos that this is not for kids. I tend to curse a lot, and I'm not apologizing for it. I curse like a normal person. And here's what I'm going to say to everybody about Ethereum. If you were buying here, no shit this was going to happen. I mean, seriously, this is a 5-year chart. Is anybody surprised that this happened? Everybody was euphoric. Yeah, no shit. But here's where I'm at on this. I cannot predict what is going to happen in the future. But when I look at Ethereum, I knew buying on the downturn and buying on the uptrend is a cycle just like every other time. We've had huge retracements over the past 5 years. Huge. This is nothing different. Nothing different. At some point, it'll be up again. It may go further down. Do I care? No. Michelle, thank you for being here. The real question, Michelle, is what did you bake today? Because I am sure that you were baking for today. And Santa may have left me some cookies. Me and Santa, we're not brawling, all right? He may have left me some cookies. Back to Ethereum. I think that 2026 is going to be the year of the stable coin. And I think it's going to be second half. This is not reversing. Whoa. Stop the presses. Stop the presses, everybody. Hold on. Michelle is off today. I didn't know that you're allowed to be off. That's crazy talk. Crazy talk. Crazy talk. Anyway. Sam, Merry Christmas. Merry Christmas. Yeah, I didn't stream yesterday. I took yesterday off. Not taking today off, though. I will try to stream it every freaking day if I can. But anyway, Ethereum is, in my opinion, going to be very interesting because they have more than 50% of stable coins are built on them. 2026, I think, is the year of the stable coin. Even companies like SoFi are developing their stable coin on Ethereum. I want to see how much throughput we're going to have on stable coins, because if there's a lot of throughput on it, then we could find ourselves in a deflationary environment for Ethereum. And if that happens, it could drive the price higher. So Michelle just does custom orders. So if you need any cakes, please go to Michelle Bakes. Michelle, throw your Instagram up and I'll pin it, please. If you need cakes from Michelle, please contact her. So Ethereum is a several-year hold. BMNR, I'm buying also. I'm averaging down. I'm in the same camp as everybody else. I'm down on BMNR, which is fine. My premise around BMNR was, with the amount that they're acquiring, they are going to be able to stake. Hold on. All right. Here is Michelle's Instagram. Please check out her Instagram. Follow her on Instagram. And if you need cakes, Michelle Bakes. So please go give her a follow. She does custom orders, always in the community. So yes, BMNR is dog shit right now. I don't think anybody's saying it isn't. At the same time, BMNR is not a traditional company. It's going to be pegged to Ethereum. The big difference between BMNR and buying Ethereum directly is BMNR is going to stake their Ethereum. They're going to generate the income from it. They can plow that right back into Ethereum. They'll get the network validator capital. So we'll see what happens. And a lot of people have been writing calls against it, which is very interesting. Now, if Ethereum takes off, I think BMNR will go higher. If it doesn't, we're going to be in the same situation. Yes, I can stake ETH now. Before, I was not able to stake ETH. And that was one of the big reasons why I was acquiring BMNR, because I was in a state where you were not allowed to stake it. Now I can stake my ETH. So we'll see what happens. I mean, I don't know what's going to happen with crypto. Crypto is going to go, who knows? I don't think crypto is going away, though. And I think Ethereum is one of the most solid ones out there when I look at where everything's being built. BSMT, thank you so much. Really appreciate the super chat. Happy holidays. Appreciate everybody being here. So that's the Christmas list for May. I'm going to give you a little glimpse into what I'm going to be saying on next. When is New Year's Eve? Wednesday? Next Wednesday. God, can you believe 2025 is over? Can you? Neil, thank you so much for the super chat. Have I had a change of heart with Venture Global? I think Venture Global is really interesting. And I'm probably going to start a position. I was going to start a position the other day. I ended up buying some other stuff instead. I like Venture Global here. I did a bunch of research into the lawsuits. I don't think that they are a deal breaker. And I think the current price, there's value to be unlocked. But I like long-term LNG. For me, the biggest risk is a political shift in 2029. It all depends. There's so many intangibles. Like, if you're going to buy Venture Global, please keep this in mind. A lot will be determined on what the political compass is in 2028/2029, because the last thing that Venture Global needs is a political climate where we're trying to eradicate traditional fuels again, in addition to stagnating exports, because Venture Global lives and dies with exports. So please keep that in mind. Now, this is my soft predictions for next year. S&P 8,000. This is why sometimes I have to turn off the chat. Sir Joseph Carlson's cousin in the chat room from Sweden. This is why I have to turn the chat off sometimes. You guys make me crack up. Absolutely crack up. So, I think the housing market gets unlocked. I am personally going to continue to allocate to the S&P every 2 weeks, like I always do. And I am going to bring up let's do that right now. There's a lot of people hear us talk about individual stocks all the time. I just want to throw this out there for everybody. We'll do a couple of scenarios real quick. This will just be like a minute and a half, very quickly, and then I'll get into my predictions. But if you start at zero and you have a 25-year time horizon and you're getting an 11% annualized return, which a lot of people think sucks, but it really doesn't. And if you're able to put $1,000 a month in, that's going to turn into $1.44 million after 25 years. And you ended up putting in 300 grand. And the total interest on it's 1.14. So a lot of people don't necessarily look at things like that. Now, let's just say, hypothetically, you were at a job and in the first 10 years of a career, you were able to save $175,000, hypothetically. You got another 20 years left, but now you're able to max out. I don't even know what it is this year. I mean, this year it's 24. And when I said this year, I mean next year. I think the increase is to 25.5 or 26. We'll keep it with 24, and we'll do a 2,000 contribution at the end of every month. And that would be maxing out for this year on a 401 or 403. You're at $3 million. You ended up putting in another 480 over the next 20 years after putting yourself in a position where you could put in $2,000 a month. You finish with over 3 million. So, yeah, individual stocks are great, but keep in mind, allocating to an S&P 500 index fund has been a wealth builder, has been a complete wealth builder over time. And that's why I have a lot in S&P. And I keep freaking adding to it. So, oh man, you guys are hilarious. Thank you so much for being here. You guys make me crack up so much. This community is awesome. And for everybody going to Amit's meetup on the 1st of February, I will be there. We'll hang out, drink some milk, drink some coffee. But in all seriousness, I think we need to normalize that an 11% return a year is pretty freaking good. And over time, this is a very strong investment. So on my investment roadmap, S&P every 2 weeks, just like always. Now, I'm going to address something in the comment. Why are you not buying a NASDAQ ETF? Okay. Most companies do not allow you to have the freedom to invest in whatever you want to invest in your retirement accounts. Work-sponsored accounts have ERISA rules, and you normally only get 15 or 20, and if you're lucky, 25 options of mutual funds or ETFs to invest in. They are pre-selected. most of the time, depending on your age, your money will automatically be invested in a target date index fund until you go and switch it. So, for me, I do not have the option of going into an NASDAQ fund. The growth fund that is in my retirement plan, I am not fond of. I put 100% in the S&P because for me, it is the sleep well at night investment vehicle for me. And it's a hedge against myself. I could put nothing in and take that money and invest in myself. But at the same time, I got to say, I really like the S&P. There's a lot of reasons to do it through a work-sponsored account, especially if there's a match. And the snowball really grows over time. And once again, if I blow up all my personal accounts, I still have that to fall back on. So I think a lot of people overlook the power of compounding and the power of being in an S&P 500 index fund. And I think a lot of people have been so used to getting 100% return or 50% return because of the stuff that the community traditionally invests in. But look, these returns aren't normal. And the slow and steady rate over time, there is nothing wrong with that. So I'm a big proponent of S&P. I like the Qs also, but I'm a big proponent of the S&P for the long term. And once again, it's a hedge against myself. So I like it if you're looking for just a straight S&P 500 ETF. The big two are SPY and VOO. I prefer VOO, but they're both fantastic. VOO has a little bit smaller of an expense ratio. So that's where we are on that. Oh, I got to show everybody something. Shit, where is it? I got the craziest gift yesterday. Let me go get it. Give me 1 sec, everybody. Hold on. All right. Are you guys ready for what my nephew had made? I got to plug it in. Hold on. This is freaking crazy. Oh, shit. This is a USB port. All right. I should probably take the plastic off. The Milk Gang Studio. How crazy is that? Established 2025. The Milk Gang Studio. Absolutely freaking crazy. All different colors. I don't even know how to work this freaking thing. Oh, there we go. So I'm going to find a place on the wall to put it. And how do I turn this off? There we go. I'm going to find a place on the wall to hang it. We'll see what happens. But yeah, that was unexpected yesterday and absolutely crazy. So really, really excited about it. Keep it green. Oh my God, I didn't even think about that. That's great. So when we're streaming, if the markets were green, we'll have it in green. If the markets were down, we'll put it in red. That's freaking dope. Yeah, I don't know if I can, I guess, can I fit it there? I am going to be able to fit it there. It's going to go right there. It'll go right up there. Or maybe it'll go above Baby Yoda. We'll see. Who knows? But yeah, that was really crazy that he got that for me. Yeah, I got it yesterday. It was a gift. My nephew got it for me. He's awesome. Let's just say that when he turns 18, he's going to be really freaking happy. So anyway, that's why S&P 500 I'm a big proponent of. For my plan for 26, I do believe that we're going to hit S&P 8,000 unless something happens in the market to make me change my mind. And I don't think that S&P 10,000 by 2030 is out of the question. So we'll see what happens. I think there's a lot of good things that are going to happen over the next several years. I think tech is going to expand. And I think that we're going to be in a really good situation with the markets. Are we going to have a retracement? Absolutely. Are the markets going to go down 10% at some point? Yeah, probably. Are we going to hit a bear market at some point? Yeah, we will. When is it going to happen? I have no idea. I couldn't tell you. I'm also not seeing any reason why we would have a bear market next year. We'll see what happens. I mean, we could, but that's not how it's lining up. So we'll see. So I think what I want to do now, let's shoot out your questions. We're just going to do a Christmas Q&A special for a while. Christmas Q&A special. Tesla 2600 by 2030 could potentially happen. I doubt it. We'll see. All right, Sam. Will there be a bear market in SQQQ soon? The hell is SQQ? Is that short the Qs? Ultra short? All right. So, Sam, I would say we already have a freaking bear market in there. I mean, it's down 53% over the past year. I got to tell you, I think it goes lower because I think the Qs are going higher. So, yeah, I mean, once again, who the hell is investing in this? Doesn't make any sense. Like, think about that. Over the past decade, it's down 99%. Why on earth would anybody want to invest in this? I don't freaking understand. Yeah, I think it keeps going lower. That's just my opinion. I think it keeps going lower because I think the markets are going to do really well next year. All right. Need to start buying dairy stocks. I'm with you. I need to buy a freaking farm. I did not buy the lag rest for my Omega chair. I'm actually going to get a new chair at some point. I did look at IREN. I like Nebius more. Starwood, I just bought more Starwood for the dividend harvesting portfolio. And I like both Starwood and Realty Income. No, I do not drink high protein milk. I do not work out anymore, so no. And I would just throw whey into my milk if I was. You know what? Yes, since it's the holidays, I do want to address the alternative asset weekly. So not doing it anymore. We'll talk about it on the fly, but I may live stream from the convention I'm going to in Westchester. We'll see. I'm still invested in alternative assets. That I can tell you. I think they're going to do very well long term. Look at what first article? Oh, SQQQ, a strategy for a NASDAQ at its highs. Yeah. Good job. These, I mean, look, I get things wrong all the time, but going against the market in the long term is stupid. If you're a trader, yeah, it can work. But long term, I think it's crazy. Miele, that's Mercado Libre, I think, Sam. Yeah, a lot of people like that. I need to look into it. Vertiv, I like Vertiv. For a laptop, I only buy MSI laptops. That's just me. Yes, I have a gym in the basement and I don't work out. Cookies and milk over peanut butter and jelly. Come on. Go get a cookie. No cookies right now. I'm still on coffee. I gotta tell you, breakfast was so fire this morning. I had freaking penne alla vodka and grilled chicken this morning for breakfast. I love freaking leftovers from Christmas Eve. Oh my god, love it, love it, love it, love it. Yes, I do talk about dividend stocks. I am planning on doing a weekly segment on dividends and starting a YouTube dividend portfolio. Now, keep in mind, I'm not doing anything for clickbait and I'm not doing anything for clickbait headlines. It's strictly just for the community. So I'm not going to be putting a crazy amount of money in. I'm going to start it with a couple of grand probably, and then we'll add to it every week or every 2 weeks and do a segment on it. But don't expect like eye-popping numbers. I'm not moving a large sum of money into it. We're going to start it from scratch and build it together. So that is something I'm going to do every week, I think, for the community, and we'll build a series around it. But yes, I want to start talking more about dividends and income investing because I think that there is not enough of it on YouTube. So we will definitely do that. Yeah, I agree. Oil stocks for 2026 could be interesting. I like energy infrastructure a lot, but I do think upstream producers will be good. I mean, I think Alphabet can continue to replicate the market and maybe outpace it. Time to buy Alphabet was when I was banging the table, not now. I mean, you can still do well, but the easy money's made. Last meal. Whew. I need an awesome dry aged porterhouse, medium rare, with penne alla vodka and grilled chicken as a side dish is what I need for a last meal. I'm copying Joseph Carlson. Um, you guys realize I've never watched his content, right? Like, I don't even know what he talks about, and I could give a shit what he talks about. Like, you guys do realize that, right? Just want to say that. Let's see. 5 dividend stocks that are on my radar. So, as just individual stocks and not an ETF or closed-end fund, Verizon, Energy Transfer, ONEOK, Enbridge, and Chevron. I mean, I know it's a lot of energy in there, but those are what's on my radar. I guess I'll give you 2 more or 3 more. Realty Income, Starwood Property, and AGNC. I'll give you some REITs also. QXO is not a dividend. Yeah, I add some REITs in there. I'm not an NLY fan. I do like Enterprise Products. I own them. They're great. Really like them a lot. QQQI over JEPQ, in my opinion. I think it is really good. I think Palantir can split. I don't think they're going to pay a dividend. That's just my opinion. Long or short Telegram goals? I don't even know what that means. Telegram goals. Oh, term. No, I don't have any. I don't do it on an annualized basis of goals. I just keep investing. I don't make goals for some reason. I know a lot of people are big on that. I don't. Just gonna keep streaming, keep writing on Seeking Alpha, and keep going. Yeah, we're not going to talk about BMNR. I addressed that probably 20 minutes ago. I'm not a small cap person. Sorry, I'm not. They're not interesting to me. So we'll see what happens. Top 3 Christmas movies. Die Hard does not count. Lethal Weapon 1, Home Alone, and I don't know. I don't know. I gotta get back to you on that one. I don't have a third. No, I did not watch Jason's 5-minute technical analysis on Rivian. I will at some point. Yes, Nvidia made an acquisition for 25 billion in cash. Yeah, I mean, look, I got nothing against Joseph Carlson. He blocked me on X because I was having an intelligent conversation with him and he thought I was engagement farming. I don't even know what the hell engagement farming meant until Tanner told me. So I got nothing against him. I just don't watch his content. I don't read any of his stuff. I could care less. I just think it's funny if you actually look at what I was talking about with him. I was writing him 1,000 or 1,500 word answers as I normally do on X, and he got offended by it. So, whatever. Good for him. So, when using leverage, what ratio is considered safe? I don't use leverage. I Leverage is not for me. I think leverage is very dangerous, and too many people probably blow up their accounts with it. I don't deal with it. I mean, I'll tell you this: I think Palantir should do a 5 or 10 to 1 stock split, and absolutely create a pandemonium in volume. I think that'd be awesome for them. Joseph Carlson, Sir Joseph Carlson, will never do a debate with me or an interview or a conversation. That's fine. I don't really care. I own Mo. I do not own Pisa, but I own Mo. I like Altria Group a lot. I actually think Altria Group is undervalued here. So I like them. Show the cardboard. Can't do it. Most of the cardboard is in a storage unit. So can't do it. You have giant fists? I don't have giant fists. What are you talking about? I think we will see a meta split when meta goes higher. I am not worried about Altria's dividend at all. Um, they're expected to just increase earnings over time. So I'm really bullish on Altria Group. I have been for a long time, and it's been a solid dividend player. It's been a solid company. You just have to be okay with the space it operates in. And if you're okay with the space that it operates in, it's a solid company. Oh, VC. VC is a great company. I am worried about the casino stocks, though. Now, I am a shareholder of VC, but when you look at a company like Caesars Entertainment, check this out. Huge portion of VC's revenue. I'm not saying anything's going to happen to Caesars, but in the trailing 12, total revenue is 11.4 billion. They have 5.7 billion in gross profit. Here's the problem though. Look at how much their freaking operating expenses are. Operating income of 2 billion. And this is just, I don't know. They have so much debt that they lose money because their interest expenses off the operating income. So I'm not a fan of Caesars, and Caesars is one of VC's largest rent contributors. I don't know. The VC market is very, I don't know. I'm not bullish on casino operators right now, especially with companies like Robinhood getting into prediction markets. So I would rather be in Realty Income over VC. That's just me, even though I'm in both. Probably not going live tonight, but we'll see. Um, we'll see if anybody else is around. Maybe I will, maybe I won't. It'll be a game time decision. Guys, that's Baby Yoda next to me. Come on now. All right. This is something interesting. And I do believe a lot of people feel this way. With legalized gambling on your phone, why would you ever go to Vegas? I got to agree. Now, I happen to like playing poker. I happen to like shooting craps. And I happen to like going in the Asian room and playing Pai Gow. At the same time, I'm not married to it. I don't need to go. I think that going to the casino is going to be something that dies out over time with the younger generation because they would rather do things on their phone. And I do think that the casino industry is going to be very difficult because of how expensive it is to run those properties. Now, if you're going to go to the club, go to dinner, go see shows, and to hang out and do stuff, yeah, it's great. But from a gambling aspect, I don't know. I think Realty Income is going to do really well next year. So we'll see. I like Realty Income. I like that REIT. It's one of my favorite REITs. I've never really looked into Rolls Royce stock. I know they do a lot of the jet engines and stuff. I should look into it. Oh, Salesforce is my dark horse. Salesforce is the catch up AI trade for me in 26. That's what I become. That's what I believe. Realty Income pays out a lot of their profits. They're a REIT. They have to pay out around 90% of their profits through the dividend to keep the REIT status. I haven't looked at ARM in a long time. I'm not the right person to ask about ARM. So I can do a deep dive on it at some point and get back to you, but I'm just not the right person. Let's see. I gotta tell you, I'll never go to Vegas again. There's no reason for me to fly cross country to Vegas. And here I'm going to make a prediction. All right, you ready? With the huge casinos coming to New York, Vegas is going to be in a lot of trouble because you have three casinos going up in New York. They'll all be up by 2030. I think that's going to be freaking really, really detrimental to Vegas. And for me, I'd rather go to Atlantic City than Vegas because I'm not going to go out to the clubs or doing that stuff. When I go, I'm going there to have a steak, drink a glass of wine, shoot some craps, and go to sleep. Not going out and doing anything else. Yeah, the RAM prices are interesting. I don't think that they're crazy right now, but it is interesting that they're spiking. Yeah, I mean, look, Vegas and the casinos, they're expensive if you're not a gambler. Like if you're a gambler and you gamble a good amount of money, they're going to pick up your expenses. But neither here nor there, it's a different conversation. I'm seeing a lot of questions about Realty Income's debt. And yes, they do have a good amount of debt, but please keep in mind that they are generating 5 billion in EBITDA. They're able to facilitate it. I mean, that's kind of standard in the whole REIT industry. They all build their businesses on the backbone of debt. No, I'm not concerned about a shutdown in January. Look, what's the worst that, I mean, let's rephrase this. From a stock market perspective, not a humanity or economic standpoint, from a stock market perspective, if we get a shutdown and the market sells off, eventually they're going to come to a resolution and it'll go back up. I'm not worried about it. Arm, thank you very much. Truly appreciate it. Happy holidays. Merry Christmas. Occidental Petroleum is interesting to me. I like Chevron the most out of that industry right now, so that's where I'm playing it. SMCI is something that I need to look more into, everyone. I need to look more into SMCI. And I got to tell everybody, I got to refine my movie list. It is so hard for me to chop it down to 25. I got to refine it and I got to go through it again. Tanner and I are going to be presenting our top 25 movies next week. We started to make the lists. It is so hard. Not easy, not easy. Happy holidays to everybody here and their families. I'm hoping 2026 is a great year for everybody. Alphabet at 150 was a steal. No, not many people wanted to listen. Am I excited about Nike? No, I don't. I don't really care about Nike. No, I'm not growing a beard. I'm just too lazy to shave. Kingdom of Heaven is a great movie. It's too long and it's not a masterpiece. Like if you put Kingdom of Heaven and Troy, and I had to watch one, I'm watching Troy over Kingdom of Heaven. I mean, just saying. I have used prediction markets. Yes. I don't look at percentages of net worth to allocate to things. I can just tell you that I have a idea what I want to do with the S&P and I'm working toward that idea. I am not, well, I may have been Santa yesterday with giving out gifts, but I'm not turning into Santa. I mean, listen, I'm a silver person, so I like silver. The first Predator, I mean, when Dylan's in the other room, it's a great movie. Silver beard. One day I will have a silver beard. It's called gray and getting old. Tell you, if my hair wasn't cut, I would look so freaking gray. Denzel is in one of the best movies I've ever seen, and it's American Gangster. Masterpiece. Masterpiece movie. I didn't say I like silver at these prices, but I am a silver person. PB, thank you very much. T1 Energy, TE. I will put it on the list. I like Coca Cola over Pepsi, not just the drink, but the stock. Scarface is a good movie, but it's not going in my top 25. If I never watch Scarface again, I'm happy. Let's see. Man, so many great comments. I don't even know where to go at this point. I'm not looking at Big Bear AI or SoundHound. I know nothing about XPay. Apologize. Good, Bad, and Ugly is a good movie. Howard the Duck. Interesting. Amara Marquis, thank you so much for the super chat. Truly appreciate it. Would you ever start a position in AMD again? Oh boy. I'm excited for their reacceleration in their data center business. I think AMD can have a bigger year than NVIDIA next year when it comes to stock performance. You're probably not wrong. AMD, for all I know, could double. Great company. For those of you who are unfamiliar with my story with AMD, I had a large position that I sold at $3.68. I sideways traded for a while. It went down on me bad. I was stuck for a year or two, shot back up, and I exited, and it kept shooting up. So I probably won't start a position, but I may build a computer from AMD products. So we'll see. Yes, Merry Christmas, everyone. Perfect day for milk and cookies. I agree. Milk and cookies will be tonight. I am sorry for mispronouncing the name. Arimon. I'm sorry. I apologize. Oh man, Strand Oakmont, what is going on? Favorite Rocky movie? Are we going to include the Creed movies or not? If we're not including the Creed movies, I'm going to rank the five Rockies. You ready? Everybody's going to hate this. Everybody's going to hate this. I don't care. From worst to best, coming in at number 5 is Rocky 2. Coming in at number 4 is Rocky 5. Coming in at number 3 is Rocky 1. Coming in at number 2 is Rocky 3, and coming in at number 1 is everybody's favorite Rocky 4. That is how I'm getting down on the Rocky movies. So, hands down, full stop, Rocky 4 and Rocky 3 are the best two Rocky movies. And Rocky 5 is better than Rocky 2. Sorry. Yeah, I mean, you can flip flop on 3 and 4. I'm sorry. That's fine. Like 3 and 4 are excellent movies. Clubber Lang with Mr. T, Dolph Lundgren with Freaky and Drago. Incredible movies. I think Tom Lee is losing a little bit of street cred with his crypto predictions. I really do. I really do. PB, thank you very much. Stock has been pounded due to softness in North American residential sales. I know nothing about this Carrier Global Corporation. I don't know anything about them. Let me look at the ticker real quick. Down 23% this year. I'll look into them at some point and get back to you. They're a huge company. Hold on. Let me bring this up. So Carrier Global, decent operating income. I mean, very profitable company. What's the market cap on this? 45 billion. Are they leveraged? Over $1 billion in cash. All right, 11.4 billion in long-term debt. What the hell was their EBITDA? Yeah, I'm not worried about that at all. Huh. Hold on. All right. About Bill 1 in free cash flow. They're repaying more debt than they're issuing. Huge buybacks, paid dividend. All right. You got me interested. You got me interested. The hell does this company do? I mean, I've heard of them, but I just don't. Okay. I recognize the symbol. Data center solutions. I'm going to look more into these guys. I'll get back to you. Thank you, PB. They're actually pretty interesting. Moshe, thank you very much. What do you think of call debit spreads? I honestly think this is a strategy no brand for 26, particularly on stocks that got hit. I mean, I don't know. I don't do call debit spreads, but I do think spreads are very interesting on some stocks. I would rather do one of two things. One, write a covered call and retain some of the premium generated by now the money call option, just in case the position runs away. That's more what I like doing. But call debit spreads could be pretty interesting for next year. So I don't know. Which ones are you looking at? I have not looked into ASPI. I am going to be doing a deep dive on SMCI at some point. ADUR. I don't even know what that is. Oh boy. There's no booze in the cup. No, I got too much I got to do. I got to finish my dividend harvesting article, which I'm 1,241 words into, and I got to try to write another article later. We're not boozing. I think we can get another 2 or 3 years before we see a downtrend with a bad year. I mean, I don't think it's uncalled for that this market rally keeps going. Spencer, what's going on? If I want, I'll stick with the milk from the farm, Spencer. But thank you very much. Have you come up with any more memes, Spencer? Yeah, Moshe. I mean, I'll look at it. That's pretty interesting. And a call debit spread could be interesting on SMCI. I agree. Where do I find all the time? Listen, this is what I do, right? I sacrifice going out. I sacrifice doing other things. I mean, this is what I do with my time. I just don't stop. Normalize stock market obsession. I agree. Let's normalize it. Stock market obsession for the win. I have no views on Novo Nordisk. I apologize. I don't know. I mean, Nike may have been a no-brainer. I hate the industry. It sucks. They have so much competition from everywhere. It's such a hard industry. Ooh, Strand Oakmont. Good question. Yes. I want to be an investor in Anduril. So, yes, I'm interested in Anduril. I'm probably going to start the dividend portfolio next week. I'm going to have to open up another account. My account's going to yell at me. My accountant is so angry because of the amount of investment accounts I have. He gets so pissed off. But it is what it is. And for the dividend portfolio, like I said, I'm not looking to generate clickbait or anything. We're going to start at a small, reasonable amount. The way that I like doing public accounts is I don't want anybody to feel like what I'm doing is unattainable. And I'm not, I never discuss what I have, what I don't have, et cetera, et cetera. But when I started the dividend harvesting portfolio on Seeking Alpha, I started with nothing and put $100 a week in to show everybody what was possible. Okay. So that's probably going to be the premise of what we do on the YouTube account. And I may, instead of starting with just 100 from week one, maybe I'll throw a couple of grand in and then put 100 a week in. That way we can do like a setting it up and then just keep adding to it and keep track of what's happening. So it's probably what we'll do. Nope, I don't care about Duolingo. I'm never going to care about it. It's just one of those things. I'm probably 100% wrong, but I think translation services is going to be disrupted by Android and iOS, so I could care less. Moshe, I agree. I mean, look, I love Chris and I love Matt, but we're on different sides of the aisle on the debate, which is fine. I mean, look, the numbers support what I was saying. I mean, I've done lengthy X posts. I'm not doing a Substack one. I do have some Mo in that dividend account, yes. All the dividends are reinvested. And I have the portfolio up. I'll show you one chart. And look, just keep in mind, this is not for everybody, okay? This is truly not for everybody. And this is not, a lot of people are going to look at this and be like, why are you wasting your time? Which is fine, okay? First, I'm going to show you the performance, and then I'm going to show you some individual positions. But this is something that I started with $100, and I put $100 a week into it. And the rules were it had to be all income producing positions, and no sector could be more than 20%. No individual position could be more than 5%. The goals were reoccurring income and risk mitigation. Those are the two primary investment goals. The secondary goal was capital appreciation. This account was never capital appreciation. The blue line is invested capital. The red line is account value, and the yellow line is dividend income. And when you look at the red line, it has not spent a lot of time under the blue line. And I know a lot of people in the chat are going to understand what I'm about to say. When you invest in companies like Oklo, Palantir, Robinhood, you get swings, you get a lot of stuff. Look at 2021, 2022. People were up a ton and then down a ton. Amazon took a 50% retracement. Right here was the Ukraine war. I mean, my portfolio didn't really retrace that much. That was the biggest retracement I had. So I'm really happy with these results. Now, I put 25,100 into this account. It is up 8 grand on capital appreciation, which is a secondary goal. It is generating $2,668 in forward dividend income. It is an 8.06% dividend yield across 100 positions or so. So this is the Seeking Alpha public portfolio that I built from the ground up. And just to show you some interesting stuff, these are the top 10 positions. And if you look at Mo, I have not added to Mo since February 2024. I put $800 into it. It's generated $227 in dividends. It has generated 28% of its initial investment in dividend income. It has bought me 4.5 shares. I mean, it's really interesting. And when you look at the top 10, something like a Realty Income and Verizon, Starwood's generated 9 new shares. Just the top 10 positions, I've put 6,700 into, current value 9,400. They're generating $668 in income. So a lot of people don't like income investing. I like it. It's one of the things I like. I like everything. So how many companies do I have in the portfolio? So hold on. I'll show everybody real quick. You guys are getting a sneak preview into this. I mean, this is, as you see with all the tabs, I track everything. These are all the positions. 109. I have 108 positions in this portfolio. And I mean, there's a lot of stuff in here. So I would DCA into a Steve ETF. That's hilarious. Now, I am thinking about exiting 20 of these positions and doing an annualized RIF on the portfolio. I got to think about that over the next week. No, I update everything in the spreadsheet manually. And I have about 20 tabs I got to keep track of. I mean, just to show everybody real quick. So my top 10 holdings that you saw with the grid about all the dividend income, this is how I track it. Okay. Like I have every dividend coming in for each company, every share purchased, blah, blah, blah. So I track every little detail for this. Yeah, there's a bunch of REITs in this. Hold on. All right, I'm going to show you every position. Okay. I'm going to show you every position by sector. I'm not going to spend a lot of time on this. And you guys are seeing something that the Seeking Alpha community has not seen. I mean, everything's in there, but I don't discuss it like this. So business development corporations is Ares Capital. You know what? Let me do it on this one where I actually have hold on. Let me do it on the portfolio side because I have everything big to small. Give me one sec. All right. So this is from largest holding to smallest holding in the sector. So Ares Capital and then OBDC. Now, I haven't kept up with the initial investments. It's more current shares, current price, and current investment. The initial investment, I stopped tracking. It was taking too much time. So disregard column N. I'm actually going to take it out at some point. Closed-end funds, I have a lot of closed-end funds. The BlackRock Science and Technology Trust is one of my favorite. Same with PDI from PIMCO for income. And then UTF, PTY, UTG. There's a lot of closed-end funds in here. Communications, we got Verizon, AT&T, and Alphabet. Consumer staples, Altria Group, British American Tobacco, Coca-Cola, Kraft Heinz. ETFs, a lot of them. QQQI has become the largest ETF in the group, followed by JEPQ, JEPI, SPYI, XYLD, etc., etc. There's a lot of them. GPIQ is in here, everyone. It's right here. And it keeps going. So we may do a riff at some point, but I like the diversification. Financials. Hold on. Did I not? Oh, I must have. Hold on. I must have missed this one. Let's group it up. So Citigroup is the largest financial, and then Truist, Morgan Stanley, Manulife, Flagstar, Bank of America, Eagle Point Credit, Bank of Nova Scotia, Old Republic International. Then Clearway Energy, 3M Company. You got the energy companies, Enbridge, BP, Kinder Morgan, Exxon, ONEOK, Schlumberger, and Chevron. You got pharmaceuticals, Pfizer, Bristol Myers, AbbVie, and then REITs. Got a lot of them. Realty Income, Starwood, Omega Healthcare, Simon Property, SL Green, AGNC, CTO, etc., etc. Technology, Cisco, Corning, and HP. Utilities, Southern Company, Consolidated Edison, Alcuin Power and Utilities. And then food and staple retail, and got Starbucks and Target. And then automotive, we have Ford. So that is the portfolio. And I may do a riff. I may eliminate stuff. We'll see. I'm not sure exactly what I'm going to do, but yeah, BSTZ is really interesting because that's the term trust of BST. And the reason I like it is because you're able to protect yourself with a buyout at the end. So it's really nice. PB, thank you very much. Buy Rivian before the launch of the R2. I will take that under advisement. Yes, Charles, I did join the Nebius community. To sum it a lot, you got to remember, I do so much research and I talk about stocks so much. This is not a lot for me to keep up with. So I may do a riff just to get rid of positions there isn't $100 in and consolidate that into other stuff. So we'll see. I am considering it, but I really do like the portfolio, and the diversification has really helped me with my main goal of mitigating risk. All right, everyone. I can't believe that I've been on for 2 hours already. This is crazy. Yeah, I'm excited about Nebius. I am. Google Sheets can update stock prices. I do know that. I need a lot other things than stock prices, though. Man, I think Meta is going to be between 800 and 1,000 next year, but I don't know. I think Meta is going to have a really good year next year. Really good year. You're right. I do need a milk sponsor. I absolutely do. Well, I think this is what we're going to do, everyone. I think this is what we're going to do. I'm getting hungry. We're probably going to stream tonight. The more I think about it, I think we're going to stream tonight. So let's do this. I'm going to go make some lunch. I'm going to go do a few things with the family. I'm thinking a little late night stream. What do you guys think? A little 9:30 to 10:30 stream tonight? How's everybody feel about that? I think we're going to do a little 9:30 stream. So I'm going to put the bat signal out. I'm going to see if anybody wants to come hang out with me for an hour tonight. Oh, U.S. futures open tonight at 7 p.m. All right, so let's do this. I don't think I can do it at 7. I may be able to do 8 p.m. Let's do this. I'm going to do a market future show tonight at 8 p.m. We'll see what happens. I'll see if anybody wants to come on, and we'll go from there. I'm going to go make some lunch, go do a few things with the family. Wishing everybody a Merry Christmas, Happy Holiday season. Thank you for being with me. Thank you for hanging out. Love everybody in the community. This is truly amazing. I will see everybody. Proof Santa is real. I had cookies last night. They were ready for me at midnight. I don't know how they got there, but they were left for me. So love it, love it, love it. I will see everybody on now. I don't think Amit is streaming tonight. Here's what I'm going to say to everyone. If Amit is streaming, I am not going to stream because I don't like doing that. But if he is not streaming tonight, I will be on at 8 o'clock. I will text him. I will figure it out. But I do not believe he's streaming. So 8 p.m. Eastern time, we will be live for a future show. I will see everybody in a few hours. Enjoy the rest of the day. Merry Christmas and Happy Holidays. See everyone in a little bit. Thank you for being here.